When you look at today's financial world, it's just constant motion, right? It's an overload of data and this intense pressure to act instantly. It feels like chaos. But what if the best tools for navigating all this modern noise weren't new at all? What if they're actually thousands of years old, forged in the disciplined minds of ancient Greece and Rome? Okay, let's dive into this. So that brings us to the big question, right? With all our incredible technology, all these sophisticated algorithms, why do we still get tripped up by the same old things? Fear, greed, overconfidence. They still drive so many of our worst financial mistakes. The thinking here is that the answer isn't in faster computers, but in really understanding ourselves, our own human behavior, something the ancients absolutely mastered. And this slide just lays it out perfectly. On one side, you've got the modern noise. It's that constant drumbeat of haste, those emotional reactions, that laser focus on just the next quarter. But on the other side, there's the ancient signal, and that's a framework built on discipline, on reason, and on a truly long-term view. The whole game is about filtering out the chaos so you can actually hear the signal. So how do we actually do this? Well, we've got to start with the internal battle. Because before we can even think about mastering the markets, we have to master the most unpredictable part of the equation, ourselves. The ancients knew this. They knew the biggest battle. Well, it's the one happening right between your ears. So our first line of defense comes straight from the Stoics with a phrase, cratene pathe. That's cratene pathe. It simply means master the emotions. Now, this isn't about becoming some unfeeling robot, not at all. It's about making sure your feelings don't get to hijack your financial judgment. And you can see just how practical this is. Stoic control is the active discipline of putting a little space, a little barrier between an impulse, like that pit in your stomach during a market dip, or that excitement during a rally, and your actual decision. This is what stops you from making the two most common mistakes: panic selling when things look bad, and recklessly chasing the hype. It's amazing how directly these old ideas translate into hard and fast modern rules. Take that first one you see, logikon hegemonikon, which means reason as the guide. In finance, that's your golden rule. You act only when the data and your strategy say to, not because your mood changed. So this isn't some dusty old philosophy, right? It's a real-world algorithm for protecting your capital. Now let's look at the flip side of fear, overconfidence. The Greeks had a special word for that dangerous pride that can creep in after you've had a few wins, hubris. And the antidote is another great Greek phrase, maiden agon. That's maiden agon, and it just means nothing in excess. It's a constant reminder to keep your ego in check, because, let's be honest, the market has a way of humbling anyone who thinks they've got it all figured out. So how does that work in practice? Well, look at the first saying, hybris proptoeos aitia. Arrogance brings downfall. For us, that translates into a simple rule. Treat those bold forecasts with a healthy dose of suspicion. The next one, dokime propraxis, reminds us to test before we act, to really challenge our own ideas. It's all about building a system that protects us from our own ego. Okay, so we've talked about the internal game. Now, let's shift gears and talk about how this disciplined mindset actually turns into a method. How do we apply this stuff to our actual strategies and the decisions we make in the market? Oh, I love this Roman paradox, festina lenti. That's festina lente. It means make haste slowly. Now, in markets that seem to reward pure speed, that sounds completely backward. But it's not about being slow. It's about moving with a controlled purpose, so you can be accurate and avoid those dumb, unforced errors that happen when you just rush. And you can see here, it's actually a pretty simple three-step process. First, you pause, just for a beat, to filter the noise from the real signal. Step 2, you verify. Check the data. Are you seeing what's really there or just what you want to see? And finally, step 3, you act with control. It's all about making sure you're responding with a plan, not just reacting to chaos. Okay, now let's take this structured thinking and apply it to building a portfolio. I want you to forget spreadsheets for a second. Think like an ancient military strategist. A Greek general wouldn't just throw a bunch of soldiers onto a field. They'd build a balanced, coordinated formation. Your portfolio needs that exact same kind of discipline. And this chart breaks it down beautifully. Your portfolio formation needs 3 key units. First, up top, you've got mobility. These are your liquid assets, the ones you can move quickly to seize an opportunity or deal with a threat. Next is your defense. These are your stable, income-producing assets that hold the line when things get volatile. And finally, advancement, your growth positions designed to push you forward. When you structure it like this, every part works to protect the whole. It's brilliant. Aristotle gives us another fantastic tool for clear thinking. He drew this really sharp line between an asset's use value, its real tangible benefit, like a company's ability to generate cold hard cash, and its exchange value, which is just its price on the market, often driven by temporary feelings and hype. And this is huge because it forces you to ask, am I buying the actual business, or am I just buying the story around the stock price? Focusing on use value keeps you anchored to what's real. Now, let's zoom out for a second, because these principles, they don't just work for individuals. They are the absolute foundation that stable, trustworthy markets are built on. Take them away, and the whole system gets, well, it gets pretty fragile. And it really all comes down to this core principle from Roman law, the bedrock of all finance, pacta sunt servanda. That's pacta sunt servanda. It means agreements must be kept. Every loan, every contract, every single trade, they all run on this simple idea. The moment that trust starts to erode, the whole system just slows down and costs go up for everybody. And look, the costs here aren't some abstract idea. When trust breaks down, borrowing costs go up because there's more risk. Reputations, which are real financial assets, get destroyed. Partnerships fall apart, and legal risks just explode. It really frames integrity not as some nice-to-have moral choice, but as a hard economic necessity. All right, so as we start to wrap this up, let's pull all these timeless ideas together. Let's build a clear method for getting through today's very complex financial world. You know, if there's one ultimate force that governs all of this, it's this: tempus rerum imperator. That's tempus rerum imperator. It means time is the commander of all things, and it is. Time clarifies everything. It rewards patient, disciplined choices, and it absolutely exposes shortcuts and bad ideas. Time, not timing, is the final judge. So, what's the bottom line here? What should you take away? Just think of it as a timeless toolkit. Number 1, master your mind. Get a handle on emotion and hubris. Second, strategize deliberately. Act with that make haste, slowly, patience, and the solid structure of a Greek general. And third, build with integrity. Just honor your commitments. Simple as that. And that leaves us with one last question to think about. We're all obsessed with getting more data and getting it faster. But as the ancients keep reminding us, information isn't knowledge, and speed is not the same as judgment. So maybe, in a world that is drowning in fast data, the most valuable and the scarcest asset of all might just be slow wisdom.